And we look forward to
Thank you.
our next conversation. Thanks very much. Well, the market's holding up nice and steady. There's no problem whatsoever. It is flat. Don't go by what the actual index value is telling you. It's that graph that tells you the story of resilience today. Big fight back from the lows. Let's get our next conversation going. We have Shibani Sarkar Kurian, Senior Executive Vice President and Head of Equity Research at Kotak Mahindra AMC on this leg of the show. Shibani, great to have you on the show as always. So you tell us, let me actually get your reaction to today's moves. I know we don't talk day-to-day markets with you, but it's been quite a talking point, right? On a day when you had so much negative news coming in on interest rates, what the US Fed Chair said, etc. This resilience that we've seen today, do you expect this to last?
Yeah, hi, good afternoon. It's always a pleasure to be here. So when you look at our markets, clearly what we have seen so far in this calendar year to date has been a lot of volatility. Markets which were outperforming significantly last year have underperformed year to date. And with this underperformance, what we have seen is that the valuations which our markets were trading at have now gone back to long-term averages. So on an absolute basis, we are back to long-term averages. And even our relative premium to the emerging market has now gone back closer to the long-term average level. So valuations clearly have corrected. However, despite the correction in valuations, what we have been seeing from the global space is a lot of uncertainty regarding interest rates, inflation, and growth. And our belief is that this uncertainty will last for some time. And hence, while we may not see an absolute big downside in the market, given that valuations are at long-term averages, we will possibly continue to see volatility. Also, what we have seen, in post the quarterly results which concluded, is that there has been wide dispersion between stocks and sectors in terms of earnings, and it's only a few stocks or few sectors which are clearly driving earnings momentum for the market, and that is something that we need to watch out for, especially where FY24 earnings are concerned, given that today consensus is still building in mid-teens earnings growth for FY24. So from our perspective, we are looking at companies where there is visibility on earnings, valuations are on your side. And in that respect, the domestic facing sectors are looking better placed where there is visibility on growth and where valuations are also on your side. So sectors such as financials, autos, and industrials continue to be our top picks.
At what point do you think this outperformance of banks or the kind of positive surprises the banks have been generating in terms of an EPS growth? For the last 2 quarters, the financials have been positively surprising and there have been earnings upgrades. But the fear is that's going to come to an end very soon. When do you think that will happen?
So at this point in time, we do believe that the earnings momentum cycle for the financial space, especially the large banks, should remain largely intact. While we possibly will see some peaking out in terms of net interest margins over the next few quarters, however, there are levers that are available for banks in order to maintain their earnings profile and their return ratios. So for instance, operating expenses could be one area where banks which have spent significantly in building up franchise in terms of distribution over the last few years, you could see some moderation and that can help offset any pressure that is there in terms of net interest margins. So at this point in time, we do believe that for the banking sector as a whole, the kind of improvement that you have seen in terms of return ratios in the last year, year and a half is not reflecting in terms of valuations. So while the ROEs and the ROAs of the sector have moved up quite sharply, valuations are actually now slightly below long-term averages. And while, of course, interest rates are likely to stay up for a period of time, and therefore you will see increase in cost of deposits, large banks which have a strong liability franchise, which have higher CASA, seem to be fairly well placed. And given that we do expect the overall earnings momentum to remain fairly intact, valuations do seem to be favorable for the sector, especially for the large banks, and that's where we are positive.
All right. Hi, Shibani. Good afternoon. And, before we talk about the markets, wanted to wish you a happy Women's Day as well. Over the last 10 years or so, I've met you at conferences, at airports, you've joined us on shows as well. And it's phenomenal the way, all of you, manage the personal as well as the professional life. So enjoy your day and wishing you a very, very happy Women's Day as well, Shibani. But, you were just talking about the market, so let's get back to that. What about, contra investment strategy? Pharma, no one's really talking about that. A few of those pharma names, smaller names, whether it's an FTC, you look at a Newland Laboratories, maybe an Ajanta Pharma, they're doing well today. Any view on the pharma space, or do you think there's still a lot of pain, a lot of price erosion still has to take place before one can look at it?
Thanks, Nigel, and happy Women's Day to all your viewers as well. And yeah, it's always a pleasure running into you at airports and at conferences as well, and apart from being on the show. So coming to your question on pharma, the way we have approached pharma as a sector has always been very, very stock specific. This is a sector where it's difficult to take a homogeneous call per se. And of course, this sector has seen significant headwinds in the last few years. Now, at the margin, what we believe is if you divide the pharma space into three parts, which is the US business, the Indian domestic formulation space, as well as the hospitals healthcare franchise, the US business is, the kind of price erosion that we were seeing has started to moderate. However, there is a lot of uncertainty where regulatory actions are concerned. And therefore, we will have to be very, very, very circumspect in terms of the kind of stocks that we pick in this space. Now, coming to the domestic formulations business, this is a space where growth has been steady and double-digit growth. The India business recovery has been fairly sharp, especially post-COVID, and things have seemingly gone back to a normalized run rate. So that is a space where we do have exposure, especially on the Indian business perspective. And the third is the hospitals healthcare franchise, where again, post-COVID, we've started seeing normalization. Of course, valuations have run up in this space. But overall, from a slightly longer term perspective, the hospital space is something that we are also positive on. But typically, our approach to pharma has been extremely stock specific in nature, looking at companies in terms of their approval pipeline. But of course, as you rightly pointed out, valuations do appear reasonable at a headline level.
Okay, Shivani, so before we let you go to enjoy what would be hopefully a great evening, give us some more thoughts. You did, sort of outline a couple of the sectors that that you currently like. In terms of the big themes to watch out for in the next 2 to 3 months, or perhaps longer, what specific investment strategies, themes, or areas would you look at?
Yeah, so some of the themes that we are really looking at, one, we do believe that the entire financial services space is a space to watch out for over a slightly medium to long-term perspective. This is a space where incrementally growth, especially across financial services products, should stay fairly positive, and especially where large banks are concerned, the kind of market share shifts that you've seen in terms of loans and deposits, and some of the large private sector banks and large public sector banks, this is something that would likely continue. We do believe that the sector is well poised from a ROE perspective, and therefore, as we were discussing, valuations remain fairly favorable. The second theme that we have been playing across our portfolios for a while has been the entire infrastructure, manufacturing, capital goods theme, and this we believe is fairly intact. What we have seen, the continued spend in terms of public sector capex, especially where roads, railways, and defense is concerned, continues. And this we believe will help in terms of growth remaining fairly strong in this space. The third area where we have been positive on has been the auto space. And again, we have started seeing revival in growth across segments, whether it be passenger vehicles, CVs, and to some extent now maybe nascent signs of two-wheeler recovery. And therefore, that is also a segment that we continue to remain fairly positive on. One area that we are watching out for is what's happening on the rural space. And last time we had this conversation as well, where at the margin, it does appear there is some uptick in terms of rural wages, and rural demand seems to be possibly improving. However, there are a lot of moving factors as well to watch out for this space, but this is a segment that we are closely watching out for.
All right, Shivani, good to hear that thought. And on that optimistic note, we'll have to end this conversation. But, I'll tell you what, from morning we've been talking about this Lady Luck shining for the bulls, and it seems to be playing out. I'm in minority right now, but the markets, we have moved to the high point of the day at around 3 p.m. Who would have thought? The Nifty up 35 points, the Nifty Bank at the high point of the day, and the advanced decline ratio firmly in favor of the number of stocks advancing. So it's a good 3 p.m. move that we have right now. Ladies, take all the credit.
Nigel? So therefore, it's confirmed, luck indeed is a lady, right? It is Lady Luck.
Absolutely. All right. Well, on that note, though, we'll slip into a short break. You come back. Nimesh should be waiting by on the other side. He'll give me some support, and he'll tell us what's going on in dealing rooms in our special segment, The Street Chat. We'll also get our technical experts back with us.